Welcome back to the channel, everyone. It's nice to be home in Texas for sure. But guys, if you watched my video yesterday, you know I broke down the massive intraday shakeout, a reversal, where the institutional players, they stepped in to defend the structural floor for the memory sector. Today, those same institutional players, they didn't just defend the floor, though. They completely took over the trading action today. What we witnessed was a fundamental structural realignment across the entire AI storage ecosystem between the massive bullish commentary coming out of the JP Morgan Tech Conference, the breaking labor developments out of South Korea, a definitive Barron's article that was dropped by the SanDisk CEO this afternoon, and the ultimate catalyst for the day at the closing bell today when Nvidia dropped their Q1 earnings print on the street. The memory sector is increasingly becoming a central focus on Wall Street. In today's video, we're going to dive into the technical tape and look exactly how Micron and SanDisk traded today. What was the strength of those stocks on the day? And we're going to discuss and break down those overlapping narratives that dropped today in chronological order. We'll look exactly how smart money is positioning itself for the rest of the week with this sector as well. But guys, if you haven't done it already, make sure you hit like, make sure you hit subscribe to the channel. We're over 16,000 subscribers on the channel now. Let's keep the momentum going. Let's see if we can reach 18,000 by the end of the month. Thank you all for your support. Let's dive in and talk about what we saw on the trading action today. Let's start with Micron first. So you can see Micron had a very different day today versus what we saw on Friday at the end of last week, what we saw Monday, and even in the first half of Tuesday's trading session. We know we saw that reversal in the afternoon yesterday. It was setting up some bullish momentum for the stock. It looked like it hit its bottom. The institutional investors stepped back in. We completely flushed out the weak hands, went through all the profit taking, got through the macro noise that we've discussed, whether that was treasury yields and everything else floating around in the environment. Support stepped back in. It drove the stock up in the afternoon yesterday, and it can carry forward and continue today. So we closed today just under a 5% growth with Micron, 4.8%. It had a $33.5 gain on the day and closed at $732.24. If you look to the right, you can see it actually hit a high, an intraday high of $735.68. So we're still a good ways away from that 52-week high of 818, but we're moving in the right direction. We're seeing positive momentum again, and there's so many positive signals in the market today that we're going to discuss in this video that give me optimism that we're going to continue to see growth when the opening bell strikes tomorrow. But take a look at the pre-market. You can see it is down right now. We're going to keep our eye on that. It's down under 1%, a 0.85, about a $6 off overall. So we'll keep our eye on that as we move into the opening bell tomorrow. But let's take a look at how Micron actually traded from a technical perspective. Because when you take a look at what we saw, we knew we were going to have a gap up with this stock right out of the gate, and we did see that right from the get-go. You can see this gap up, but it was met with a bit of a sell, a flush. If you look at the volume below, you can see this kind of bearish volume, selling volume, and we see it get driven down to actually the intraday low today was about just over $700. $700.67. We'll call it 701. That was the low of the day, but we saw support right after that brought the stock back up to about a 727 level. But it gapped up and we got up to a high of 735, but immediately met with some selling action and drove it down. So this is just probably profit taking, algorithmic selling, flushing out of more weak hands with the stock, quite frankly. But we saw that nice support overall. It was a nice kind of response over there. And then after that, we saw this stair-step accumulation pattern for Micron throughout the day. It was categorized, as you can see on the screen, by higher lows on steady ascending volume. The real confirmation, though, came in the final hour of trading. If you take a look at that massive green, that last candle, this massive green volume that I'm circling here on the right, it is just a nice bullish sign to finish off the day. It was actually about 170,000 shares that cleared in that single 5-minute block there. This push drove the 14-day RSI to a 61.69 that you can see in the bottom right of the screen. So it's signaling strong bullish momentum for the stock, but it's still leaving plenty of runway before hitting a technically overbought territory. This is a highly healthy structure for the stock, making the minor pullback that we just saw in the after hours of less than 1% in my opinion, more than it's just standard noise in the marketplace. We'll keep our eye on it, see what it looks like as we get closer to the opening bell tomorrow. But the stock is in a great position. The fundamentals are strong. And there, as I mentioned, we're going to go through a lot more really strong signals from Micron that give me optimism that we're going to ready to have another bullish day tomorrow as well. But let's jump over and take a look at SanDisk, because SanDisk had a positive day as well. Not as much from a percentage perspective. Stock is obviously a lot more higher priced. So 0.65 equated to a $9 gain for the stock. I'll take a positive growth with SanDisk. I think many of you out there as well that are investors holding positions in the stock. It closed at 1392.28. You can see the intraday high was 1444. We're still below that 52-week high of 1600. And in the after hours or the pre-market right now, you see it down by about 0.25%, 0.3%. It just jumped up a little bit, about a $5 gain. So it's essentially flat overall. We'll keep our eye on this stock as well. It has been moving back and forth this afternoon as I've been watching it. It's flipping from kind of green to red. Just as we know SanDisk does, it moves quickly. And if you just look at the 5-minute pattern chart here, you can see the differences with SanDisk compared to Micron. This is what you get with a significantly higher beta stock. You just see, the swings, the violent volatility, I would say. It moves so quickly in one way or the other. And it's what we saw today across the board. It is a technical, like a fascinating technical footprint for the stock. It opened this morning with some severe volatility that you can see that actually drove it down to the low of the day here of about 1367. Sorry. But again, very similar pattern we saw with Micron. Really strong support. Drove the stock back up to a high of 1421 here. This candle closed at 1415. Gave a little bit back as well, but then it just got into this consolidation phase. You can see throughout the afternoon, it really got into this tight kind of consolidation pattern here between 1385 and 1395 for the majority of the afternoon session. And the stock closed, at 1392. It closed in that last spike of about 24,000 shares overall. But as I was mentioning with the RSI, it is reset. It got really down. It's in this perfectly neutral position right now at 45. We saw this RSI for this stock running really hot before. So in my opinion, I think SanDisk has successfully wound its coil tight right now. It's neutralizing the overbought conditions that we saw earlier in the week that we've seen with the stock in the past. And I believe, in my opinion, it's setting itself up for a clean launch pad for the next leg higher in the stock overall. And I'm going to get you to an article that the CEO dropped in a moment that should give you some more optimism for the stock and just the pricing power that SanDisk and their products will have in the market. But we have to jump over to the earnings that had the highest technical strength today, the macro elephant in the room. No question about it. It's the Super Bowl of tech, the tech sector earnings, as I always say. And that would be the Nvidia print that dropped at the closing bell. So I'm going to go through a few pieces with you. A very high level. You could see the revenue was $81.6 billion. So significantly outpacing estimates. We know their estimate, the Wall Street estimates was 79.15. So it was actually up 20% over the prior quarter. I'm going to jump down and show you all of that pieces in a moment. I just want to call out a few things on the left here. There were the highlights. But you can see strong demand, strong growth across diverse end customer base, hyperscalers to AI clouds, to enterprise, to sovereign customers. Just really shows the diversity of NVIDIA's customer base. Blackwell adopted and deployed by every major hyperscaler, every cloud provider, and every model builder. Agentic AI and reinforcement learning represent new CPU growth opportunities. Vera Rubin on track for second half of this year, starting in Q3. And NVIDIA AI infrastructure delivers the lowest token costs, highest token throughput, as shown in the latest benchmarks. But let's jump over and take a look at what we saw for their overall. Here you go. Here's a little kind of greater breakdown. As you can see, revenue up 85% year over year. I mentioned that. Earnings per share, if you look in the last line, it was $1.87. It was up 140% year over year. If you compare it to same period last year, it was 78 cents. So that significantly beat consensus as well. Consensus was $1.77. So that's a nice sign. You can see their gross margins right in the range where they need to be, 75%. So really strong kind of earnings statement. You can dive in and take a look at this online. They did post it on their investor relations site. I would encourage you to take a look at it and dig through it because there's so many strengths in there. But there are some pieces that are really strong for Micron, for SanDisk, for Western Digital, for Seagate as well, for the memory players as well. Because you have to dig in and take a look at the data center business alone. Nvidia's data center business, it pulled in an unbelievable $75.2 billion. It was 92% growth year over year. And when you break down that business further, you know they look at compute and networking in that data center business. The compute side of it, it grew to a company record $60.4 billion. And the data center networking side, it grew by almost 200%. And it actually had a revenue of just under $15 billion for the quarter. This isn't just great news for Nvidia, though. This is absolute validation for the entire memory and storage complex. Because every single one of those $60.4 billion worth of compute GPUs, they require massive multi-gigabyte configurations of high bandwidth memory to function. Plus, Jensen explicitly stated in the press release that the build out of the AI factories, in his words, it's the largest infrastructure expansion in human history, is accelerating at extraordinary speed. This data proves that the physical constraints of AI compute are being tested right now, big time. And the storage layer, the memory titans, the Fab 4, they are the primary beneficiary of this capital allocation. Let's just listen to what Micron's executives had to say this morning at the JP Morgan Global Tech Conference. Let me pull you up an article, and I can give you my thoughts on just the commentary overall provided by their executive vice president. So you could see JP Morgan conference in Boston. Our balance sheet has never been stronger. A few things that I'll call out that were highlighted. I just want to highlight is demand continues to grow for the foreseeable future. The balance sheet has never been stronger, according to their executive vice president. You know, we are focused on meeting customer demand. And then the last piece here is the strategic customer agreements enabling us to improve our planning overall. But there was three kind of buckets of comments that their executive vice president got into today. He's the VP of Global Operations. He really dove into three areas in this fireside chat. First, he illuminated where AI demand is going. He stated that the market is rapidly moving past just the simple human to AI interaction and is shifting to human to agentic, and more importantly, machine to machine interactions. And this evolution means that the context windows are getting exponentially longer. And because memory capacity directly dictates the accuracy and performance of these agentic models, memory is no longer being bought as a commodity. It's not being seen as a commodity. It's being treated as an indispensable, highly valued strategic asset by the hyperscalers. The next piece he went into is he kind of dug deep into and explained why supply cannot easily catch up to demand that we see in the market. He introduced the concept that every investor needs to understand, the HBM trade ratio. He explained that because of the extreme performance architecture of high bandwidth memory, the actual die sizes are significantly larger than traditional DRAM. And this creates a steep penalty where shifting manufacturing lines to HBM results in drastically fewer total bits produced per wafer. And as long as HBM demand skyrockets, standard DRAM supply is simultaneously being choked out. Finally, he addressed the physical limitations of scaling production as well. He noted that the industry has hit a wall where adding incremental equipment to existing lines is no longer enough. The transition to the next wave of advanced nodes, the 1 gamma node that Micron is focused on, they require a entirely new greenfield clean room space to complete the build out. Full manufacturing lines, they have to build full manufacturing lines from scratch. And because building these facilities take years, Micron stated flatly they do not see any ability for global supply to catch up with AI demand for the foreseeable future. And when the head of global operations tells you that the laws of physics and construction timelines are locking in a multi-year deficit, You have to pay attention. And then, while Micron was making the noise this afternoon, SanDisk wanted to make some of their own noise because their CEO dropped an article that talked about what he is seeing right now with their products, what he's seeing in the market as well right now. Let me pull that up and go through it. So SanDisk CEO says memory will stay undersupplied and AI is changing the business model overall. I'll pull out a couple headlines for you, but you can see here in the key points. He said the flash memory market will remain undersupplied at least through 2027, driving business transformation. And we know that SanDisk is adopting multi-year agreements with customers, aiming to stabilize its historical cyclical business. If you just think about it, if you let that sink in, he didn't say for a few quarters. He said a long period of time, extending his visibility at least through the end of 2027. But it's how SanDisk is capitalizing on this undersupply that is changing the entire investment thesis for this stock. Historically, as you know, memory has been a brutally corrosive, highly cyclical commodity business. You have a boom, manufacturers overbuild, prices crash, everyone loses money. Well, the SanDisk CEO today, he announced that AI is permanently breaking that wheel. And because hyperscalers and enterprise data centers are desperate for a predictable, guaranteed supply of high-density flash memory, SanDisk is successfully shifting its entire business model away from spot market transactions and moving into multi-year agreements. This completely changes the risk profile for this company. It limits the downside, it provides predictable cash flows, and explains why Citi came out yesterday stating that SanDisk stock has a room to rise another 52%. You remember I shared that article. It said it has an upside of 52% where it traded, and they set a new price target for SanDisk at $2,025. So that was a huge article as well. And then the last piece I want to touch on before we close up the video is just the update on Samsung overall, because we could see in the market that Samsung, the union planned strike, they suspended the planned strike, after reaching a tentative deal. The global supply chain spent the last 24 hours, as you know, staring directly into this economic abyss. But early this morning, the South Korean government, the mediated talks, they officially collapsed. And that threat of an immediate supply shock, sent shockwaves through the morning session, acting as a secondary catalyst that drove buyers to Western-based suppliers like Micron and SanDisk as a geopolitical hedge. However, in a dramatic breaking kind of last-minute development, just hours before the planned walkout, Samsung narrowly avoided the strike by striking a tentative wage agreement with the union. The deal suspends the general strike from May 21st to June 7th, while workers cast their vote over the next week. While the immediate threat of this catastrophic global supply disruption has been suspended, the situation is far from resolved. So let's synthesize all of this data and lay out the tactical blueprint for the week. Technically, the price action today, it completely reestablished the dominant uptrend. On Micron's chart, we saw it hit an intraday low of 701. So this is going to serve as the rock solid structural support or the floor for the stock moving forward. SanDisk, today's low is 1367. It is a clear line in the sand for all of us to keep our eye on from a risk management perspective. And as we move into Thursday and Friday, we have to look at two things. One, how will the market digest the Nvidia Q1 earnings that dropped today after the closing bell? And second, what updates will come out of South Korea? Keep our eye on the ongoing Samsung labor dispute at the end of this week and over into the weekend. Will there be any changes that could signal either a bearish or a bullish flag for the sector overall? The big picture takeaway, though, I want to leave you with is don't let short-term intraday noise that we've seen over the last couple of days blind you to the structural transformation happening right now in this sector. Memory and storage are no longer the volatile, uninvestable stepchildren of the semiconductor sector. They are the highly protected, multi-year, long-term, contracted foundation of the artificial intelligence area. The institutions know it. The CEOs are confirming it, and today's action and today's tape proved it. Guys, I hope you enjoyed the video. I look forward to seeing the next one. Take care.